A wholesaler is a person that find deals off market usually. He's spending a lot of money and time on off market campaigns, and he presents it to investors. Um, like anything else in life, you have to have a reputation, and it's taking time, and you have to then need to know that you're closing on deals. And once you have a reputation of someone who closes on deal, you are the first one to get their listings. And some people are getting upset on wholesalers saying, oh, he bought it for X amount of money and he's going to make $15,000 profit on me. And I don't see that way. I want to see how much the property cost me. I don't care if the wholesaler making tons of money. Good for him. He's working out for that. And wholesalers are very important used to be, at least in my single family world. The guys who work out and looking for properties, usually off market.
Welcome to Real Estate Deal Closers with Anette, Talie, where we focus on the deals. Our guests are real estate closers who will share in detail the whole process from finding a deal to closing it, as well as strategies and tips to help you do the same. Here's your host, Anette Talie.
Welcome to another episode of Real Estate Deal Closers. I am your host, Anette Talie, and my guest today is Doron Rice. Welcome, Doron.
Hi, Annette. So happy to be in the show. Really excited.
I am super excited. If you don't know, Doron is one of my partners in the 194 unit deal we did recently in Columbus, Ohio. So I am super excited to bring him on the show. And so he's going to share a little bit of his story, how he started one of his deals. So let's get into it. Let me read a little bit of Doron's bio so you can get to know him. He is the founder of Rice Group, LLC, and oversees the company strategic direction and leads the firm's investment and day-to-day management, including underwriting, closing, investors' relationship, and property management functions. Since its inception in 2016, the company has invested in over 15 single-family residences properties in New Jersey and several apartment buildings in Indiana and Georgia. And lately in Columbus, Ohio as well, with 194 units that we are partners with. Doron is also involved in the New York development industry. He is the leading development project manager for a large 52-unit apartment building construction in Manhattan, New York City, aside for being passionate about real estate. Investment and development, Doron brings invaluable architectural expertise as he garners more than 18 years of professional experience designing and managing some of the world's most inspiring structures. And we share that, the two of us.
Yes,
We're both
do.
Architects with 18 years of experience. It was so funny when we got into the same team.
And I apologize for the long bio.
No problem. So, Doron, I want you to share with people, how did you get into real estate?
So, as you said, Annette, I'm an architect. I was for 18 years. I was a full-time architect in the large firms in New York City, and in one of my my lunch breaks, I went to have a lunch with a friend of mine, colleague, a sweet person that I still consider one of my best friends. And we always talked, and she told me, "Hey, I just listened to a wonderful podcast called Bigger Pockets." Because we always talk about other things than architecture, we're trying to clear our head. And I said, oh, you know what, I'll listen to that. So on my way to work, I listened to that. Before that, like everyone else, I read Rich Dad, Poor Dad. But Bigger Pockets, really, I was wow, that's pretty awesome. I'll try it. So for a year, I educated myself. Obviously being an architect, and it's a very demanding job. But on the commute, a little bit on the weekend, I just really educated myself. What is underwriting? How to find deals, how to network, try to focus where I want to find the deals and to buy my first house. So that's how I started. That's
awesome.
Pretty much how I started. Yeah.
Awesome.
Yes.
And so you started in small single family homes, and now you have grown and you're focusing on multifamily.
That's correct. Yeah. I transitioned from single family houses where I have I hold them. I have a portfolio of single family houses. I think they still have a place in my world. I still like them, but I transitioned to focus mainly on multifamily assets.
Awesome.
The Deal.
All right. So what deal are we going to talk about today?
So I want to talk about a single family house. You know, I know where we are focused right now more in multifamily, and we going strong on deals and we're looking. But I do think that in real estate, you mainly make money when you buy the property. Okay, everyone said that, and everyone hear about it, but I want to demonstrate why. So this specific property that I bought, I was approached by a wholesaler who, you know, worked with me in the past, sold me a couple of properties before, and he told me, Doron, I have a smoking hot deal. You have to see it. So I did the first. Usually, I just go quite quickly, looking if I like the location, and if I do, I see on my desktop what's the underwriting look like, you know, without even seeing it, just to see if I want to waste my time, not waste, but if I want to spare my time and go and check, because I can't see every property that is presented to me.
Right.
So I
and
went
do
there.
you focus on a specific type of profit, like, you know, A, B, or C class property?
Right. Yeah, in that specific area, and my single family houses, I mainly focus in central New Jersey, because I live in the north. It's about an hour and a half away. And the reason is that the returns are pretty good. In the north where I live, the returns are not that great. It's more of a home buyers area, where in central New Jersey, it's a mix of buyers and renters. And I like the C+, B- assets for single family houses. Responsible tenants, hardworking tenants, family people. And yeah, so that's my niche.
Okay,
So
awesome.
yeah, so I went to see the property, and it was a mess, just like I like it. It was flooded. I won't forget that. I went down to the basement, and it was winter in New Jersey. Winter is pretty cold, and the water went out to my knees. Like, you know, it was dark. I was like, oh God, that's pretty cold. But I saw that the house has a really good bones. I like what I saw. I saw that I can fix it with no problems, and I went into a contract. I told him on the spot I want the house, so I bought it. If you want, I can share the numbers.
Absolutely. But before you do that, you know, you mentioned that a wholesaler brought it to you. So how does it work with a wholesaler? Because when we buy on a regular deal, and this is for people that are starting, you know, you normally look on the MLS, and then you find they are listing it for a certain price, but then you can negotiate, you can send an offer, and they say yes, no, or they counter. So tell me a little bit about how do you work with a wholesaler?
That's a great question. So a wholesaler is a person that find deals off market. Usually, he's spending a lot of money and time on off market campaigns, and he presents it to investors. Like anything else in life, you have to have a reputation, and it's taking time, and you have to then need to know that you're closing on deals. And once you have a reputation of someone who closes on deal, you are the first one to get their listings. And some people are getting upset on wholesalers saying, oh, you know, he bought it for X amount of money and he's going to make $15,000 profit on me. And I don't see that way. I want to see how much the property cost me. I don't care if the wholesaler making tons of money. Good for him. He's working out for that. And wholesalers are very important used to be, at least in my single family world. The guys work out and looking for properties, usually off market. And so that's the way. And then instead of buying them, they actually at the closing day, they're just assigning the contract to you. So they don't buy the property themselves.
And you bring a really good point. You know, it doesn't really matter how much money they are making, as long as the property still makes you money and your numbers work, right?
Correct.
Because if you can still make money and your numbers work, it doesn't really matter how much money he's making. You know, he's spending time and resources on finding the deal for you, and you are saving that. You are not spending the time or the money. All right. So, and you know, when you're dealing with wholesalers, and you can correct me if I'm wrong, you have to pay cash, correct?
Yes and no. I used to buy quite a few in cash, and then I used also bridge lenders. Define once they trust you, and they know that you're closing properties. They don't really care how you close. But at the beginning, they'll ask you for cash just to not waste their time and not to put them in a bad position. But you're right. If you're just starting and you don't know the wholesaler and you don't have a reputation, it's most likely cash. Yeah.
Cash. All right. Okay. So let's talk about the numbers. How much did you buy it for?
So this specific property I bought for 67,000.
Was that the straight price from the wholesaler, or did you negotiate it down?
No, I don't like to negotiate with them. If there's a wholesaler that I don't know and I think is new, I will tell him this is what I think it's worth. But if it's an experienced wholesaler and I have a relationship with him and I trust him, I just run my numbers and I tell him yes or no. I just like the fact that I'm at the top of the list and they're sending me the deals first. And if I say no, it's not for me, thank you, that they trickling down to other investors. But if I start to negotiate the numbers of them, I don't like to do that in that case. But everyone is different. Some people do negotiate.
Okay, good. So, well, I guess like if you get a deal that, you look at it and you say it's not this price, but I can do that depending on your numbers, then you could negotiate it.
Yeah, it's happened. I told them it's not for me and they asked me why. And if I tell them this number just don't work and they say me, okay, which number works for you? It happened to me. But I let them take the drive and I let them know that I'm not arm wrestling them because I want to be their favorite investor.
Absolutely. That's a great way to be on top of the list.
Yeah, absolutely.
All right. So what happened next? So he gave you the price of 67,000.
Yeah.
And so I am assuming that you had to, once you went to visit the property, you had to assess how much repairs you needed to do to this property.
That's correct. After I signed the agreement, I went to the property and thoroughly saw what my scope of work. If you are in the industry like an architect or a contractor or an engineer, it's easier for you. If you don't and you're just starting, I think it's a good idea to take maybe a contractor. Just be careful not to promising the work. You need to get some bids. But I found out that the house has great bones. You just need to really and the flooding of the basement that scares me was only a hot water heater that just came to an end of the life. So it had a crack and all the water came out. So I put about $25,000 to repair it. Turned out to be a beautiful property. I rented that in no time. There was a waiting list. People were actually kind of really begging me. Got good rent for that. And then I went to the bank that I'm working with, which highly recommend developing relationship with bankers as well. They're also your best friend and a part of your team. And they refied this property. They valued the property at $190,000, and he offered me 80% loan to value, but I didn't want to over leverage myself. So I am at 70% loan to value. So you can do the math, and I not just kept the house, not just cash flowed, but I made a nice profit. So it's the burst strategy on steroids. Because people ask me what's your return, I tell them it's infinity. It's endless, and it's more than that because I really flipped it to myself. I made money from all sides. So that was a great deal. I didn't expect all deals to be like that, but that's probably the best deal I did in the single family world.
So when you looked at the property and he told you 67,000, you look at the comparables around the area. So what were the comparables selling for?
Yeah, pretty much what the bank came with, 190.
190. So you knew like right there and then that this was an amazing deal.
I knew the right there. That's why I told him on the spot, I'll take it. I didn't wait, so I'll think about it. Like I just told him, okay, I'll send you the contract.
Absolutely. All right. So you wanted to show people, how you gotta make money when you buy, and you can totally see this, with this deal. So walk us through that, and also, for people that don't understand, what do you mean by it was an infinity of return?
Okay, that's a great point to touch on. So when as investors we're looking at few parameters how the deal is good or how the deal is bad. The most common one is the return on investment. Return on investment is pretty much how much money you take out of your pocket and how much money the asset produced in cash flow. So if you put, for example, $1,000 into a deal, okay, I'm just making it simple. Okay, we're living in different world. You're putting $1,000 into a deal, okay, and the deal produces about, let's say, $100 annually. That would be 10% return. Now, if you didn't put anything into the deal, and the property still producing $100, it's endless because you didn't put anything out of your pocket, and that's a home run. If you can get to that, you did something right. Even if everyone has his threshold, everyone has his return on investment percentage that he'll be very happy with. Some areas like New York, San Francisco, that it's low, it's 3% because it's more secure, used to be. So it's all relative to risk as well, but that's infinity. Infinity is like you didn't put anything in and you're still getting money back.
Right. And when you apply it to your deal, for example, you put money in, but then when you refinance, you were able to take all that money out and more. So you
Yes.
did not leave anything on your deal. You basically took
Right.
all the investment out of the deal, and the deal is still producing you money. And that's
Right.
where you get that infinity or, never ending return
Right.
on your investment. That
Right.
is very nice.
But people need to understand you still need to have money to initial investment. You're getting it back, but you still need to have the capital to deploy into this deal.
Absolutely,
Yeah.
absolutely. I think a lot of times, people want to invest without any money, and in this type of deal, you need to have some money. I mean, you can do wholesaling maybe without a lot of money because you are not buying it; you're just assigning the contract.
Correct.
But a flip or a bird strategy like this one, you do need to have some capital.
Yes, correct. That's correct.
All right. So what is the strategy for this property? What is your plan for the future?
Oh, I'm keeping it. It's still producing a great income every month, and the rents are just going going up. Right now, it's even that if I'm to sell it now, I can make much more money than it was appreciated beginning. So I'm just going to keep it.
Excellent.
I'm keeping it.
So, how did you said that you have a portfolio of 15 properties. So is this the strategy that you use to buy one after the other one, like you would invest in one? How did you achieve that?
Yes, so I bought at the beginning one and then another one, and I remember the first property that I bought. I was like so scared, and then I was so happy when I started to see the money, and then it became easier and easier. I got to 15, but I did sell some, and I did buy more. I'm trying to every end of year, to look at the numbers and see which property performs better, which property perform worse, and I try not to fall in love with the house itself. I'm trying to fall in love with the numbers, and I kind of refresh my inventory once in a while. If a property, I can see that I can sell it for a nice profit because it's appreciated, but it's not producing so well in cash flow. So I'll sell it and I'll deploy the proceed into a better deal, or so I'm still doing that.
Excellent. That is good because you have to, as an investor, you have to look, at your portfolio constantly and see what's the best way. How can your portfolio give you more returns? And
Correct.
sometimes it's going to be sell the property. To me, I always think about like which of my properties would I sell, and right now I am good. I don't really want to sell any of those because I was looking at the market. I'm like, if I sell mine here in South Florida, I cannot buy anything
Right.
better. So why
Right.
sell?
And I'll give you another example. I had one property that actually produced good amount of money, but for some reason I just had bad tenant there. It was okay area. It just had a bad kind of just bad tenants came to at the beginning when I screened them, and I do screen them very well. They promised me the world, and the credit was good and everything, but all the time. So I just said, you know what, I'm done with this property. Something, let someone else deal with that. I'm done. So that's another, just once in a while it happens. Once of those assets that you just don't want for whatever reason.
Awesome.
Productivity hack.
All right. So now we're going to talk about what's your productivity hack? What is that one thing that you have implemented in your business that has led you to be a lot more productive in it?
So because we're all very busy, and we all, some of us has jobs and we investing. Some of us are full-time investors, and we don't have a lot of time. We need to be productive. So my partners and I hired a virtual assistant to help us underwrite properties, to help us with the administration, to help us with the social media, and to just give us a hand in whatever we cannot handle and we don't like handling. And that was a good decision. She's helping us a lot, and just being more productive. We doing initial underwriting. We give her all the financials, and she'll put the underwriting into a starter underwriter, and then one of my partners will kind of look into more details, but she'll do the initial work, and social media also she'll help us a lot, and so on and so forth. So that was a productive decision.
Excellent. I love that. And I am in the process of doing the same. It's so easy to try to do it all yourself. But once you get the help, you realize, I have that big weight off my chest. So now I can focus on more important tasks.
Yes.
I love it. I love it.
Expert tips.
All right. So now we are in the part of the show that you are going to share with me 3 expert tips. So what do you want to talk about today?
I want to talk about, and you preaching about it all the time, networking. Networking brought me to the next level. I cannot even explain how important that to network with like-minded people, with people who share the same goal. We hear it all the time, but it is important. I met my partners through networking. Together we grew. We bought multifamily properties. I met you, Annette, through my partners networking that I network with. So it's almost like a snowball that you network with people who network with other people, and then you find them. So there's a lot of cliches and sentences like your network is your net worth, and so on and so forth. But it's true. Network with good people, network with people that you share the same values, and you see, and we can, multifamily, it's a teamwork. It's a heavy lifting assignment, and you need good people to share this task with you, and it's fun. Coming from a single family house world where you're doing everything alone to a multifamily where you have partners, and it's much more dynamic. It's more fun, I think. So network.
Absolutely. I second that. I'm always talking about networking. It's so important, and it has helped me so much to grow. But you have to really align with people that you have the same mindset and that you like, because you're going to be working with them for a long time if you decide to partner.
It's a mini marriage. You need to know who you're getting into this relationship with. But if you guys sharing the same values, it's priceless. It's fun.
Absolutely.
Yeah.
So what's the second one?
The second one, I think, will be do you due diligence. Doesn't matter which property you buy, multifamily, definitely, single family for sure. Do your due diligence. I can just give you an example of physical due diligence. Obviously, in multifamily, you're doing financial and physical due diligence. I'll talk now about the physical, and I'll just give you an experience that when we went to buy a property, we knew that it's a little older. We checked the pipes. We knew that they will have a lifespan. The plumbing pipes, the sewer, and we just put money aside, and we knew that there's going to be time we need to fix it. And this time actually came. We had to replace sewer pipes that cracked in one of the corridors in the lower level, and but we weren't freaking out. We knew, okay, we actually expected that, so do that. Another example of due diligence that you should do, and I wish someone will tell me that, because I was in a way too arrogant not to do that. Because I bought a lot of single family houses, at some point I didn't ask for survey anymore. I said, oh, I see the fence, I know where the property line is. And then and then I realized that the fence has nothing to do with the property line, and the house had maybe 2 feet of a yard. And I decided to sell the house, so I had to buy the lot next to it. So this house will have a yard as well, but check your survey, do your due diligence. This is things that I cannot emphasize enough. Just do your due diligence.
Absolutely. This is so important. I have the same problem I was sharing with you, where the neighbor, there was a chain link fence on my side, but my lot went farther. So he just built a wood fence, a shed, he put an RV and all kinds of things without a permit. And like 6 feet of it is my property. So I'm going to have to deal with it soon.
I had to deal with that as well. And the neighbor, his fence, when I bought the other lot, his fence was in the lot that I bought, and I told him to move it. And I had to, let's put it that way, that I had to call the police.
Yeah, so I am assuming it's not going to be a fun time when I tell them that they have to move their brand new fence and all of that. And, I want to be nice about it, because I don't really want to have to call the city on them, because they have no permits. So, we'll probably have to negotiate either rent or they have to move it, so we'll see how that goes.
Good luck. Hopefully they're a little bit nicer than the people I had to deal with.
Yeah, hopefully.
Yeah.
All right, my friend. I'm super excited to have you here on the show, and tell people, where can they find you if they want to contact you online?
Well, I'm on social media. I'm on Facebook and other social media, Instagram, and also people can email me at drice@ricegroup.us. Always glad to talk to people, connect with people. And that's the best ways to connect with me.
Absolutely. And I can attest, it's been such an amazing experience to work with you guys on this deal. Everybody's ready to pitch in and to just get the work done when it needs to be done. And so I am looking forward for the next one. So
me too, Anette. Me too. We all very lucky, and it's it's just show how the power of networking and finding good people. So I thank you, Anette.
All right, my friend. Nice talking to you.
You too.
And if you guys are enjoying this show, don't forget to subscribe, like, and share. Bye, everybody.
This was Real Estate Deal Closers with Anette Talie, brought to you by Talie Investments. We hope that you enjoyed this episode. Our goal is to provide amazing value on your real estate journey. Connect online at www.talieinvestments.com, where you can find this episode and more. Did you like this episode? Subscribe, like, and share.